Hi, everybody. All right, guys. Stan Weinstein, stage analysis, forest to tree approach. And now I'm deep diving in sector rotation. I'm trying to understand what happened the last time we completed a cycle. If I could say a cycle ends with a bear market. So previous market review on sector rotation, circa 2007, 2008. I went through the sectors. I had identified the peak. And after that, I identified the breakdown. So we had from peak to breakdown. And after that, I put them in order. From the earliest to have peaked. So we had in 2007, to recap, real estate going out first, the peak, health, financials peaked right after, telecommunications, I had them peaking in May 2007. Discretionaries were the next ones to peak. Industrials, information technology a little later in October of 2007. Utilities in the December of 2007. Same thing for consumer staples. And look at these two guys. These were the last to fall back before the crash. October and May of 2008. Energy and materials, guys. Same time in May. And you see the top pattern, they were the last ones to fall. So if you start seeing the cycle, the other ones, if you go back to the first one, it had already reached its top by May 2008. Right here, May 2008. This was the peak of the last two sectors. This was the peak of the energy and the materials right here. May, right here, 2008. So you already had the cycle. This one already is winding down. It had a pullback with the other sectors pulling it up. Those two remaining sectors that were still going in an uptrend. But after that, when energy and materials started going down, they brought everybody else. Everybody else continued their downtrend. Let's zoom in here. Same thing here. Where's May? Pull back up a little bit, and after that went down. So where we are today with this, guys, I tried to identify with the present highs I saw that could be. Until they're past, they're the highs. And you see we've had highs, higher highs, did not quite make it, lower lows, trying to go up here, but still didn't get that previous high, and still, so it's starting to get farther and farther away from that high here. I could even draw. Let's start drawing. Let's start using our imagination, guys, to see where that breakdown line is going to be. Could start imagining maybe here at the 73 level. So you see from time of high to breakdown, we don't know yet, right? So it's still ongoing. Let's go check out the health. Oh, health. So I still have the high here for healthcare. 1, 2, 3, 4, 5, 6 months ago. I have the breakdown line here around but it's still trying to go upwards. So it's still early, right? You see that 12-month moving average still going upwards. So these two, this one's in the stage 3. Real estate in stage 3, health still going up. Okay, if they're still healthy, I'm going to start putting them downwards. All right, let's just go through them and then I'll resort them. Financials. Oh, see that high? 1, 2, 3, 4, 5. Starting to cycle down, stage 3. Telecommunications. Now I could zoom in. I have the high all the way back here in 2016. So this one has been going downwards since then. Never had a high since 2016. Telecommunications. Never had a high. So it's been already cycling down and already almost at reaching bottom stage 1 territory, guys. So this one has almost had time since the last bear market in 2008 to have already cycled through. And you'll see, I think there's another one that behaves the same way. This one has never slowed down or never gone into a stage 4. So from the last time that it crashed, relatively from that peak to low, it's been on a tear. So consumer discretionaries, I have this as a high right here. So that's still the high. It's fresh, still healthy. Industrials, stage 3, that high, 1, 2, 3, 4, 5. It's been a while, guys. 1, 2, 3, 4, 5, 6. Stage 3. Information technology, I still have the high here, starting to go upwards. Still not above. This might hold as a high. So we're very precursor. So take a step back. There's some indications, true, that there's less and less highs, but some sectors are still not rolling over. Utilities, that looks like it's rolling over. So let's do little lines here. Patterns within patterns. It's hard to tell. Could be here. We have to wait to see how this morphs, but this is definitely in the stage 3. Here's the high right here. And 1, 2, 3, 4, 5. This is starting to roll over. It's almost looking like a stage 4, definite stage 3. And we have to see how, but the 12-month moving average going downwards, guys, not a good sign. Consumer staples, wow. See, that one's rolled over. Roll over, oh. And I have the breakdown here. Remember, on those previous charts, financial 2008, how the first ones to roll over were already deep down, and when there was a thrust upwards with the other sectors, it tried to do another high before it really crashed down. Consumers, just like that. So when I'm going to resort these consumer staples, it's going to be probably for some of the first ones that have started to roll over and are getting pulled back with the other sectors that are keep going up. But when the other sectors have a down, it should drag this one down, continuing more and more. It's like once you start rolling over the sector, guys, it's your pullbacks happen when the other sectors pull you up. But after that, when the other leading sectors have downturns, it seems to bring you down also. I guess maybe that's a clue that if you're approaching a bear market, if it would be just pure sector rotation, then it should not go down, right? When those bigger sectors that are stage 2 start giving up gains, that money should roll over and save these sectors. And instead of those pullbacks being just pullbacks and then continuing down, they should pullbacks, but actual reversals going back into stage 3 maybe, and then continuing. Don't see that much here. This one, energy, was the one giving me some hope. I had a defined breakout right here, although with a lot of wicks above. And you see the price action going upwards. Now it seems to want to pull back below want to retest that breakout line. So we'll see right here how it's gonna pan out. But this was a healthy indication that some of the money from the stage 2s that were pulling back or giving up gains, rolling over into the energy sector. It's kind of funny because I had the peak in 2014 for the energy sector. So that's very far away, guys. It almost had time to do it like a full cycle. At a peak 2014, it peaked way before all the other sectors. It had time to go down while all the other sectors were keeping going up. And it seems that this could be a possible stage 1 bottom, guys. and it seems to want to do a stage 2 breakout. So is the energy the final one to go? And in the meanwhile, I had the time to do a cycle within the bigger cycle. That's why I try not to look at charts and always do correlations, because they change subtleties. If you're always looking for that one-to-one, market goes down, gold has to go up. Well, if that correlation that day it goes down the drain, then you're trapped, right? If that's the only metric you're basing it on. So you need to always be observant, take a step back, and reanalyze, re-see how it's behaving. And worst case, guys, if ever you get, you start not to understand what's happening and conflicting news, just go back to the chart and just do your lines, and then implied measure move, stage 2 breakout is the index, doing a stage 2, and then just base it off that. Keep it simple. So I don't know what to do with this one. Is it gonna continue to pull out? And after that, that's gonna be our last reprieve, and when this one extenuates, if we reach a peak in a few months and then goes down, that'll be my updated peak, and forget about this cycle that I had within the bigger cycle, and bring us more in line with the other sectors that are peaking closer to this date. And that would be the last one. That would bring it back in line with the energy sector being the last one to peak before market crash, if this happens. So the last hurrah, the last momentum, the last stage 2, giving us hope that everything's okay, only to be the last one to fall. So the time that it goes up, and if the other ones start rolling over, closing in on those breakdown lines, financials, already there almost, closing in on those breakdown lines. Man, I don't know what to do with this one. Telecommunications, man, it's already been so low, but it could keep going down, who knows. Breakdown line, discretionaries, same thing. I'm just using my imagination to see how this could pan out, because to have the bear market, they all have to coincide eventually. They're all go down here, and I just want to draw a horizontal line. Horizontal trend line. They all have to break down at the same time. We'll go back to 2007, 2008. Consumer staple, same thing here. They have to go back down here to have the perfect timing. So we're kind of early. I'm not. By no means that the bear market's now, and this could be stage 2s going stage 3s, going back into stage 4s. But what I don't like is, okay, I'm going to put them in order now. Okay, that's a stage 3. Put it down here. Health, stage 2, still stage 2. Leave it here, it looks nice. Financials, stage 3. Telecommunications, definite stage 4. Health. Consumer discretionaries, still stage 2. Industrial, stage 3. Information technology, still stage 2. Utilities, stage 3/stage 4. Staples, stage 3/stage 4. Energy. Well, possible going to stage 2, guys. Another. So I'm going to leave it here. Materials, stage 2/stage 3. Financials, same thing. Okay. Staples right here. Utilities, same bucket. Okay, industrials a little bit better. utilities, real estate. Yeah, it's been a while. This could be if it goes back down here. It's gonna be one of the first ones to have peaked, not reach its high, the same way that it was back in 2007. Remember, the real estate was the first one to let go, have a high in February of 2007. This could have been one of these precursors. And telecommunications, man. We're not there yet. Remember, these are monthly candles. They have to keep adding on. Definitely choppy waters here. Not clear cut. Where's my sectors? Stage 3. Stage 3, but a lot of action below. See, it's not as healthy as this stage 3. I'm going to bring it up. See, it's below the 12-month moving average, going downwards. Breakdown, pulling back up, hitting what I call a wall, previous support, turn resistance. And see if it goes back down. And this one looks pretty much like the world non-US markets, guys, the EFA. Let me just jump over to that index, EFA. Look at, pull up, break down, pull back up to a wall, previous support and resistance. So what are we doing 2008? Too early to tell. I would have liked at least to have one breakdown, one confirmed breakdown, except telecommunications, which has definitely broke down for a while, going to stage 4. That's the first one. Utilities. Stage 3, guys, choppy waters. So I'm going to keep an eye out for sectors the way it is today. And as soon as I have one that's confirmed breakdown, well, telecommunications kind of is. But if I have a second one starting to break down, then the pyramid might start untumbling. So the utilities, consumer staples, these are the ones to look at right here. These two next ones to go. They're threading very close to the 12-month moving average. Consumer staples, utilities, and let's see how they behave. If they start going back down to this breakdown line, and they start not being able to go back into a stage 3 or stage 2, be warned for the other ones to follow. We have, I think, a good months ahead that some of the healthier sectors could continue going up. We just have to wait and see, guys. All right. Thanks for listening. That's what I want to keep in touch on the sectors, recap, and if in light of new information, change my opinion as usual. All right. Thanks for watching, guys. Ciao.